So plenty of people know that I came to SEDC from Kentucky, where I was really fortunate to lead the Kentucky Association for Economic Development. Really great multi-organization, multi-function association, not unlike a lot of the great associations that exist in our footprint. But when I got to Kentucky in 2017, we had experienced a record amount of economic development growth. At the end of 17, we were 2x above whatever year was the previous record for corporate or for capital investment. It was a little over $10 billion. And what I learned really quickly is there was such a fantastic team at the Cabinet for Economic Development that was leading that, and Tess was such a massive part of that. We always followed Tess, and she was such a great advocate for the Commonwealth. So now it's so fantastic to see that same advocacy and impact and success and strategy scaled out nation and worldwide. So we're so lucky to have Tess in the South still working on our behalf and as part of the SEDC family. So I'll introduce her real quick, and then I'll get out of the way so we can get into the session. But Tess is the Principal and VP of Location Intelligence at Global Location Strategies. I saw her colleague Susan Donkers-Franklin walk in as well, so thank you for being here. But with years of experience attracting major capital investment to both metropolitan and rural communities, Tess has an eye for impact. While at the Kentucky Economic Development Cabinet, she recruited jobs and investment into the state, evaluating the long-term returns that could result from $14 billion in potential new business investment for manufacturing and industrial projects. She recommended competitive sets of tax credits and economic incentives that could be offered to business and investors supported by the community and state. She also coached up communities across the state to help them advance toward investment readiness and has a passion for helping rural communities succeed. Advising on best match between business advancement and communities and states is at the heart of GOS investment advisory practice. For companies, Tess advises on their next competitive location. For communities, she advises on sectors and companies their assets can attract. The GOS point of view is that all parties ought to earn a positive return on their investments. Tess implements that vision every day. So thank you so much, Tess Fay. There's stairs here too.
Okay, very graceful. Hello. Thanks, Matt, for the intro. And likewise, it's been really wonderful to watch Matt's continued progression and just all of the amazing things he's doing at SEDC. We've got a lot of connections, too. He lives in Lexington. I'm a Lexington native, and he lives in the same neighborhood that I grew up in. So I always love to be here and continue to see the work being done here at SEDC. So there are some door prizes. It looks like a relatively small group right now, which means your odds of winning are high. So keep that in mind. You have to stay through the end. Let me see. Do I just press this or this thing? Yeah. Perfect. At GLS, I work predominantly with the team of kind of new to the industry employees, so, just out of college in their 20s, and so, they would be not surprised that I just had issues figuring out the technology of this clicker. So, GLS, just very quickly, a little bit about us. So we are a corporate site selection firm. We are headquartered in Greenville, South Carolina, though we do work nationally and internationally. Over the past several years, the majority of our work has been looking in the U.S. and Canada, but we do have active projects going in Europe and Asia and elsewhere as well. But I really like to emphasize that we are a purpose-driven organization. About half of our staff are former economic developers from state and local levels, and it just really is so close to our heart, the work that we're doing to help support communities. This is, it's such a privilege to be able to work with you, all of you, and you're the reason why we're able to be successful. So we are very focused in all of our work on matching companies and communities for mutual long-term prosperity. It's really core to who we are. Here you see just a handful of some of our clients. We've had a big few years, big announcement this year already and more on the horizon, but we typically do process-intensive sort of manufacturing. That's really our ideal client, who we really love working with and who we really feel like we excel at. But certainly we continue to diversify and work across many different industry subsectors as well. And here, again, just a few of those recent announcements. I think the most recent, Susan, was Albemarle in Chester County, South Carolina, which is just a really wonderful, yes, project. Shout out there. So again, just a little bit about us. And then when we think about what we do as a business, I think most of you all know us for, our core business of consulting, where really the majority of our time is spent working with corporate clients, a little bit with economic development clients. But several years ago, we took a step back to think about, we're growing a lot, we've got a lot of energy and forward momentum, and what do we want to do with that? And so we've been dedicated to building ourselves in a way that we can provide a product or a service for every location decision. And so there's the traditional site selection side of that, but then over more recent years, we have grown software platforms. So we now have 3 software platforms that we own. One is our internal analysis tool that we use for our consulting work, called Site Shepherd. The second is an RFI builder online platform called Lasso that many of you all are probably familiar with. And the third is, at the end of last year, we were very pleased to acquire Location One, you all know as Lois. And so anything in that sphere of the business, Susan is your go-to. So she is VP over on that side of the business. But then most recently, and what I want to talk a little bit about today, is we are preparing to launch a new set of product called GLS Insights Reports, and these are standalone reports really geared for companies when they are starting to think about where in the U.S. might we want to go, where might we want to start to narrow down that region to then look for sites. And so the first of those that we are very close to coming out with is about food manufacturing. And so I wanted to spend some time with you all talking about the work that we have done and the insights that we have gathered along the way, why we're thinking about this to begin with, and then to share with you all a little bit of the rankings that will be published in September. So first, if we just define, I think it's pretty obvious to all of us what food manufacturing is, but if we want to get a little bit nerdier about it, this is NAICS code 311, so differentiated from beverage manufacturing, which falls into 312, just a little quirky thing that definitely impacts some of the data and the results. So we're looking at any industry subsector that converts livestock and agricultural resources into consumable goods. So again, I think it's pretty straightforward to all of us what that means. And food manufacturing has a really big impact nationwide and globally, certainly, but we focused this work first on the U.S. So if we think about why GLS wanted to start this new initiative with food manufacturing, there are a lot of reasons, but certainly, like I said, it has a really big impact on all of the work that we do. When you look at manufacturing forecasted growth rates over the next 10 years, manufacturing as a whole is projected to decline very slightly by 0.1%. As compared to that, food manufacturing, you can see, is forecasted to grow 0.3%. So this is an industry that, from an employment standpoint, is looking to continue to grow, which is pretty interesting to all of us in the work that we're doing, of course. If you look at what it means from an employment standpoint, so there are about 1.71 million individuals working in food manufacturing in the U.S., and that is about 13.3% of all manufacturing employment nationwide. So again, this is a pretty big chunk of manufacturing is in food specifically. And then if we look at the trends year over year, what I'm showing here is from FDI Markets. This tracks they call it cross-border investment. It's a little bit quirky, but basically if a company who is headquartered in one state does a project in another state, that gets counted. So the quirky piece is that if that company invests in their own state, it doesn't get counted, but this is still a really good proxy, and the methodology is consistent across the board. So it gives us good insight into what's happening. And what you can see here is that food and beverage manufacturing is a really big subset of the manufacturing projects out there historically. But then if we look through COVID, it's also been a very resilient industry in terms of investments. It actually increased in number of projects, project investments since COVID happened, whereas some of the others remained a little bit stable, maybe are bouncing back. That 76 number there is for electronic components, so that's kind of a neat little side note too. I feel like we all feel that in the work that we're doing. But again, when we were looking at GLS, which is the first of these standalone reports that we want to put out there to help corporate decision makers kind of refine their search region, this is a big part of the reason why we started with food manufacturing. There are also a lot of really big names in food manufacturing, and a lot of these big companies are buying up the smaller companies and earlier startups. So a lot of names here that you recognize. Does anyone have one of these companies in their community? Show of hands. Have you seen growth or at a minimum stability of these companies from the COVID period to some extent? No? We'll need to talk about that later. Mm-hmm. Yes. Depends on the subsector, right? Yes. Depends on the subsector. So big company names, and they're making big announcements. So here you can see just a subset of some of those, right? Big names, big announcements, big job impacts. And, this is only increasing in terms of the scale of these projects, which I'm going to talk about a little bit more. So that's some background on the food industry, why it is that we wanted to really take a deep dive at our company to wrap our arms around what is this sector really doing and why. So obviously, huge economic impact, continuing to see a lot of opportunities there. So then we took a look at what are some industry trends, what's happening. And so I want to share a few of those to you. And these are very intuitive. I'm just going to show you the data that backs up what we probably all feel already. So the first of those is that ready-to-eat food products have really seen a massive growth. So I showed you the chart that showed food manufacturing projects are increasing. That's true. But within food manufacturing, the subsectors are shifting. And ready-to-eat food categories are really benefiting over the past few years. Again, it makes total sense. You can see here a stat that in the period since COVID, the purchases of groceries rather than restaurants surged by over 23%. We can all think about working from home, being at home all of the time, in the peak of COVID, not wanting to go out to restaurants. Again, this all makes sense. It makes sense that manufacturers would have to pivot in this period to accommodate more of that ready-to-eat, work from home, eat at home lifestyle that we all were forced into leading for a while. So here's a couple of those interesting trends, and we could certainly provide a lot more of this and go into a lot further detail. But first, I'll just note that snack food manufacturing was one of those industry subsectors that really benefit and continues to invest over the past few years. Again, this makes sense. They have longer shelf lives. When we're all working from home and getting super bored, it's really easy to go. We want to grab a bag of pretzels or chips or whatever. And so when we look at the data around the projects in just this subsector, in the period from 2017 to 2019, so just before COVID, there were 13 projects that FDI Markets tracked in this subsector. Comparatively, in the period from 2020 to 2022, there were 22 of these projects. And states like Indiana, North Carolina, and Ohio have really seen a lot of the benefit of the projects in this subsector. Indiana has had a lot of really large Frito-Lay expansions, for instance. There are a lot of expansions rather than new locations in this subsector. So Frito-Lay in Indiana had two big expansions. One was $159 million. The other was $70 million. And that's indicative of the sort of investments that is happening in a ramped up fashion. Bakery and tortilla manufacturing, that subsector, also has seen a lot of growth since COVID, a lot of investment. So there were 15 projects tracked between 2017 and 2019. Between 2020 and 2022, there were 29 projects. So a jump from 15 to 29 that were tracked. And a lot of the benefit has been in the SEDC region. This is going to be a trend throughout my presentation, kind of pat you all on the back. Good job. You're some of the states where food manufacturing really has a lot of great opportunity. But so the states, including Georgia, North Carolina, and Texas, have gotten a lot of these projects in bakery and tortilla manufacturing. 62% of those were expansions. So I'd say if you have these food manufacturing projects, if you're not already seeing the growth, definitely stay focused on your retention efforts, your existing business efforts, because again, looking at the trends, the industry is continuing to grow and make investments, and we don't necessarily see that slowing down too significantly. And then next, ready to eat, that the meal kits, the pickup at the grocery store, ready prepared meals, we've seen really tremendous growth in, and big investments made by some really big names. So you can see just a timeline of a handful of those. But even though some of these names may be less well known from a household standpoint, they're owned by companies like Nestle and Kroger. So I think that this really emphasizes that these are big companies who are making really big bets in the ready-to-eat meal category, continuing to have opportunities in the coming years. The second trend that we took a deeper look at was the growth in animal food manufacturing. So there's a lot of pet food projects that have been out there. Again, it makes a lot of sense intuitively. There were a lot more pet adoptions over the COVID period. We were spending more time at home with our pets and starting to think more about the sort of food and treats that we're giving them. There also was the rise in e-commerce that also impacted where we were buying our pet food and other goods, and that opened us up to being able to have more product selection than we had traditionally when we just went to the grocery store, or I still get mine at Costco because my husband and I are cheap. But it really opened up a wide world of all of the products out there, which also helped to expand this subsector of food manufacturing. If you look at just the sheer scale of these projects, they're also increasing significantly. So if we look just at the count of projects tracked, from 2017 to 2019, there were 19 of these projects. From 2020 to 2022, there were 40 of these projects. And then if we look at the capital investment represented, they have gotten very massive. So in that initial period, the average capital investment was $32.6 million as opposed to $175 million in the 20 to 22 time period. So there are a lot more of these projects, and they're getting a lot bigger. Even when you adjust for inflation, these are some really massive opportunities. Oh, and states there who have really benefited include Kentucky, Missouri, Arkansas, and Indiana. And then the third trend that I want to touch on, which I thought was the most interesting as we started to dig into it, is the way that the industry has evolved due to the coexistence of automation and human labor. So we've all been talking about automation for a long time now, but it really has been slower to be adopted by food manufacturers. They are at an increasing speed adopting automation, and their facilities now look more like this than the traditional meat packing plant, the historical vision of these food plants that just go for as many individuals paid at low wages as possible and shoving them all into a factory together. Certainly, those facilities still are out there. We probably all have one in our community, but these new investments are more and more tending towards a higher automation sort of operation. So when we think about what that means for us and for the projects that we're recruiting, first, CapEx has continued to increase. So in the period from 2017 to 2019, the average capital investment for a food manufacturing project was $62.28 million. In the period from 2020 to 2022, after adjusting for inflation, that rises to about $80 million capital investment per project. So significant increase in terms of the capital investment, which obviously means more tax revenue for our schools and other good things that come along with a higher CapEx. But then the initial thought, and I think what we hear from our community members a lot is, well, that is reducing the number of jobs that we need. So we took a closer look at that and really what that automated sort of facility in food manufacturing was doing to employment. So first we took a look at how many jobs on average were being created for each $1 million of capital investment. So typically at GLS, we kind of draw the line at $1 million per job created as our line of whether we will consider it labor intensive or capital intensive. So if you have more than one job created per $1 million, we would call that a labor intensive sort of project. And the project drivers and the mentality of that client is a little bit different than if we were less than one job per $1 million. So you can see here, first of all, we still are in a very labor-intensive sort of project space. You can see even in 2022, we were at an average of 1.54 jobs created per $1 million invested. So we're still labor-intensive, but certainly you can see that decline where there are fewer jobs per capital investment. But if you look just at the sheer job count rather than this job count per capital investment, you can see that actually the headcounts have remained really steady overall. This is not going to be true for every single project out there, but on average, these are still pretty high job count projects, and the average per project has remained pretty darn consistent. So I thought that was interesting. When we think, though, about who the workforce is that are needed for these facilities, that's where there's this major shift that's happening. So rather than, again, the traditional low-skill sort of food manufacturing worker, we're seeing these new capital investments in food manufacturing requiring a much more sophisticated skill set. And the wages are starting to increase due to that. So what I want to show you here is from 2018 forward, what the average wage is in a few different industries. So that top line there, $79,000 per year, that is for manufacturing across the board. So all sectors of manufacturing. Average wage right now, we pulled this morning, was the $79,000 number. And that has increased 16.5% relative to 2018. The green line there, that is all industry. So when you look at the average of all industry wages, we're currently at about $68,500 per worker, average across all industries, and that is over the past 5 years, an increase of 21.7%. If you look at food manufacturing, the orange line, it's still lower. Like, this is still a lower wage industry overall, a lot of that because you still have those sort of historical low wage, lots of employee factories out there. That's probably not going to go away in a very short fashion. But what you can see is even though we're at a lower wage point there on average, the 5-year change is pretty rapidly accelerating, at least more so than manufacturing overall. So again, pretty interesting to think about the way that skill sets, that automation in food manufacturing is shifting the skill sets that food manufacturing companies are going to be looking for. And that plays a big role in the rankings that we performed. So let me jump into what we did. So these are all of the insights and just some of the big trends that we're seeing and watching that are impacting the way that these companies are thinking about their investment. And so we took all of that and we took our project work and conversations with our partners, and we started to think about what is kind of a typical food manufacturing project. You are never going to get an RFI that looks exactly like this, right? But we took kind of a typical, what would we expect that could be pretty well representative for an analysis. And so we looked at 250,000 square foot building, or about 30 acres if we were going to look greenfield, an investment of about $100 million and 150 jobs. We had some revenue stats there that we needed to develop so that we could do tax estimations. And then utilities, not small, but pretty moderate, so 5 megawatts, 25 MCF an hour, 200,000 gallons per day water, and 150,000 a day sewer. So when I look at this is pretty attainable for most communities, I think. Now, again, you're never going to see an RFI that looks exactly like this, but we tried to build this in our platform so that it would be really easy if we had a company come to us and say, okay, well, this is great, but we need 180 employees, or we're actually going to be 3 megawatts. We made it so it would be pretty easy for us to adjust those numbers and see how the results changed. But this is the basis of the results I'm going to share with you. So, as with all of our corporate site selection projects, we look at a bunch of quality metrics and a bunch of cost metrics. And so, from a quality perspective, our model is very comprehensive, and it has 3 different tiers. So what I'm showing you is just that first tier of categories related to quality. Keep in mind that this analysis is site independent. A lot changes once you start looking at sites and comparing that. But again, right now, what our goal was with this analysis was to look at where might you start to narrow down from the US or from a region to specific areas where we need to go find that site. So you can see some of the drivers here. Again, big emphasis on workforce and education, specifically related to that higher skilled new type of food manufacturing employee. We then also looked at cost drivers. So if you think about, from everything we've talked about, those specs that I showed you, do we have any guesses of what the top cost driver would likely be for a food manufacturer? That's right, it's labor. Any guesses on the next? Utilities. I didn't even give these answers away ahead of time. This is great. Yes, utilities. And then in our model, we had taxes and lease costs, on average, about 12% each. What you'll notice here is this does not include logistics. That is a huge caveat. That is hugely dependent on the project, and it absolutely makes a big impact, but it's not really something you can estimate because it changes so differently from project to project. And really, for food manufacturing and other subsectors as well, that's going to start to narrow down the region where we would then take a look at this analysis and say, okay, you need to be in the South Atlantic because that's where your logistics sweet spot is, so let's look at the best rankings within that smaller region. If we think about the cost sensitivity of this representative project, this is an exercise that I recommend every single one of you do when you get any RFI. You can do some really quick math and start to get into the client's head to think about what is going to be the biggest deal to them, or what should be, they're not always rational, so what should be the biggest deal to them, right? And that can help you refine your pitch. So we can see here, not only is labor the biggest of our cost drivers on a percentage basis, but it's also going to be the most sensitive cost. So a difference of 1 hour of wages for each employee, $1 an hour wages for each employee is over $300,000 a year in annual OpEx impact. You can see that the impact, going down the row here, water and wastewater, we talk a lot about water and wastewater and the high demands of that in food manufacturing. First, keep in mind that we're not talking about beverage manufacturing in this analysis, so that was one of the reasons why I pointed that out at the beginning. But then also, again, keep in mind these specs change drastically by subsector. So what we have is a pretty moderate amount of water, wastewater, and in this case, they may act like they're super sensitive to those rates, and you have to accommodate accordingly. But if you just look at the sheer math, really, it's going to be things like wages and lease rates that are going to have the biggest impact on their bottom line. So let's get now to the results. And this is where I need you all to accommodate me, and this is going to be really fun. So I'm not moving to the next slide until we get a drum roll going. Thank you. This is great. So you're not going to understand any of this, so we'll do a drum roll again. We'll do it again in a minute. So before I get into throwing out some of these names, and hopefully there are some communities in this room that are on the list, but what I wanted to show you here, you've probably seen a composite model before. This is super typical of site selection analysis, but what I show here is on the x-axis, we have the quality model score. So you'll remember we have that that pie chart. That pie chart is comprised of all of the other pie charts. There are over 100 data points for this model within that pie chart. So the x-axis here shows where each community scored in that model, with low score on the left, high score on the right. The y-axis shows the location-dependent operating costs, so those factors that we just talked about, with high cost on the bottom, low cost on the top. So the ideal place to be is in that top right-hand quadrant. And what I wanted to show you all here, so we have broken down for our analysis, because of the highly regional nature of food manufacturing, we have broken down the U.S. into 8 different regions, but we, prior to coming here, we pulled out just the SEDC communities. Those are the ones there in yellow at the top, just to show you all where you fall as a region. So what I see here is that overall, you are a relatively low-cost part of the country for food manufacturing. I think we all probably, again, intuitively know this, but the data proves it out. And then what I also see is that there's a very large span from left to right. So there's a lot of low quality, relatively, locations, a lot of high quality, relatively, locations, and everything in between. And keep in mind, too, as we go through these results, that everything is locations, like driven, the averages of this axis are based on the locations being considered and the project specs. So if the project specs start to change for a different subsector, the results are going to change. That axis is going to change, and where you fall on it changes. But then also, as you start to narrow down, if a client came to us and said, okay, but we want to be in Missouri, that starts to change too. Like the axis then changes because you're looking at a different subset of bubbles. Overall, though, a lot of opportunity in SEDC metros is what I see here. So now what I'm showing are, again, just SEDC region, and hopefully, Matt, I got it right. But we show all of the MSAs that were evaluated in this analysis, broken down by size, small, medium, and large. So another chance to be interactive, but who wants to throw out a guess of the best small metro, which is population less than 250,000 in the MSA? He wants to guess the best small metro for food manufacturing based upon our ranking analysis. Anyone brave? Joplin. Good guess, but you're wrong. You were kind of close geographically. You're not that far. So Bowling Green. Bowling Green got number 1. And I should say our ranking is based upon 75% of the quality score and 25% of the cost score. That's how we got to the ranking. So Bowling Green. Anyone from Bowling Green here? Who's the closest to Bowling Green here? This is where there are prizes. Where are you from? Lexington. Anyone closer? Okay, I'm not going to throw this that far. I was really looking forward to launching these, but I'm going to toss. Can you please? Nope, okay, didn't see it coming. All right, can you deliver that? Pass it on over. Okay, congratulations, Bowling Green. Best medium metro in the U.S. for food manufacturing, and this is population between 250 and 1 million. Guesses? No. Savannah. Anyone from Savannah here? Who's the closest? Charleston? Anyone closer? Sorry? Oh, yeah. Should I give myself? Oh, man. What a treat. Okay, where am I going? Over here. I am not. This is not. Thank you. They're light at least. That's good. Okay, large metro. Best large metro, which is population of greater than 1 million. Atlanta, Kansas City. Any other guesses? Charlotte. Great job. Anyone from Charlotte? Well, okay. I do have an extra. You're in luck. Okay. Are you ready this time? One. Oh. Okay, one more. One more. There's 2 of them. Okay. Okay. So the reason why we looked at this by size, for one, we came at this a lot of different viewpoints. We looked at it by size because some of our clients, let's say it's a company headquartered in a small town in Germany, and when they locate in the U.S., they don't really want to go to the Atlanta metro, right? They want something that's smaller, the specs can meet it. And so, this way we're able to isolate and see which of the smaller population metros might be a good starting place for you. The other side of the spectrum, some companies may have locations everywhere globally, and maybe they want to be near a big international airport. So maybe we focus in on those larger metros. So that's part of the reason why we looked at it this way. Next, we looked at, on that 2x2 chart, and we're going to go into a map for each of these 4 quadrants. But we took a look at where, just in the SEDC region, where each of those metros ranked nationally on that 2x2 chart. And if we think about there's the cost metric and there's the quality metric. So the next round of guessing, who wants to guess for the SEDC territory, which community is the lowest cost? So just isolating the top of that chart. Anyone want to guess a state where it might be? Alabama. It's Gadsden. Did I say that right? Alabama. Anyone here from Alabama? This is northeastern Alabama. Who's closest? Oh, yeah. I didn't see. I wouldn't have given it to Connor if I'd known that it was him, but all right, Connor. Ooh. Okay. Next. I played soccer. I can't. This doesn't work for me. So now thinking about the x-axis, the quality. Who would you all guess is the highest quality within SEDC states? Any metro ideas? No? Whoops. Raleigh. Anyone here? No? Closest? Richmond? Y'all are going to have to fight over this. Tell me who's the closest, because
She's closest to you from
that's a great idea. But you're also right in front of her, though. So
I believe in her.
okay, good job. So if we think about these 2 metros, and again, we're focusing on the extremes here, Raleigh being the highest quality for SEDC region, and Gadsden being the lowest cost for the region. Site selection is all about trade-offs. So sometimes our client is willing to go to the highest quality location, even if there's a cost penalty. Sometimes they're going to be really focused on the cost metrics and really want to focus in on the lowest cost location. With Raleigh, we see super high quality, really promising current workforce, future workforce, just a lot of great things going for it when you look purely at the data, not site-specific. In Alabama, you've got very, very low cost. So this was the metro that had the lowest cost overall. And as we saw, that was the biggest driver for food manufacturing. But on the other hand, the demographics were less attractive in terms of the median age and labor force participation rate and so on. Okay, now the top performing metro overall in the SEDC region, which also happens to be number 1 for the whole U.S. Savannah. So, and I think you already got a chocolate, so I'll keep that one for myself. So in the interest of time, I'm going to kind of speed through this to get to a couple of maps, but certainly happy to talk more at length again about the data points and for the top ranking locations. Oh, and I should say, nationally, the top 3 nationally are all in SEDC region. So Savannah's number 1. Huntsville, if Huntsville's here, you get a chocolate. If not, Connor's going to get another one. And then Bowling Green again. So 1, 2, and 3 for SEDC region are also 1, 2, and 3 for the country. So kudos to you all. But again, this is site selection is all about trade-offs. There are pros and cons for all of this, and you might not think, oh, Savannah, a hub of food manufacturing, right? But we were not looking at what is currently strongest in food manufacturing. We were looking at what do the data unrelated to sites say about where opportunities could exist for this sort of facility. So a few commonalities for the top-ranking regions. They have a high number of awards in those 2-year certificate degrees that are part of this new higher skill set employee that food manufacturers are looking for. They have a relatively low cost of living. They have a relatively low labor cost. They also have a population that is growing. So it doesn't necessarily matter how quickly your community is growing, but just the fact that it is growing, particularly if it's growing among a younger population set, is really attractive, obviously, across the board for all investment. And then also another commonality of all top-ranking regions is really strong logistics network, so trucks, ports, rail, et cetera. So we talked about the quadrants. I'm going to break down and show you all a quick map for SEDC and who fell into each of these quadrants, a little easier to see. So first, we'll start with, we called it the unfavorable locations, and this is not a knock on anyone if you were on this map. So again, for this very specific project, very specific criteria, what you see on the map are fell relatively lower quality and higher cost. So if you are on this map, of which there are very few in the SEDC region, think about who your ideal client is and make sure that you're marketing to them. And think about the projects that need to have your strategic assets and go after those projects. And even if that's within food manufacturing, again, that's a very broad sector. And so just narrow down into who actually within the sector needs what I have to offer and where could I be competitive. Next, low-cost location. So this is that upper left-hand quadrant. You can kind of think of this as like the economy quadrant. So a little bit less quality related to, relative to everyone else, but a lower cost point. So quite a few SEDC metros in here. So if you are on this map, think about if there are opportunities to improve that quality score relative to food manufacturing here. And also think about, again, those specific subsectors within food manufacturing where you could be higher quality, right? So if the specs change, the axis changes, and where could you excel within food manufacturing? Because you're already in the low-cost half of the 2x2, which is good news. So next we have what we call the premium location. So this is high cost, but also high quality. So a handful here as well. If you're here on the map, think about messaging what the positive trade-offs are for being in a high-quality location and what some of the hidden cost benefits might be. For instance, your labor costs, if you're here on this map, your labor costs are definitely higher on average than the rest of the country. But do you have lower turnover? So, could that help to save the client some money and be a trade-off for the higher costs, the higher wages? And then also think about if there are strategic incentives to help you reduce some of those costs. And then finally, what we call the preferred locations, a whole lot of these. Again, if we're thinking nationwide, if we start to get regional or specific to a few states, everything changes. But if we think nationwide, there are a lot of really great opportunities in the SEDC region. So this is where they look like on the map. So think about if you're here, think about if you don't currently have food manufacturing in your community, could this be an opportunity to diversify your industry mix? Do you have the right product that meets the needs of this sort of manufacturer? Just because you look good from a data perspective doesn't mean that you have the site or the utilities that could get you in the mix for a project. And then finally, market to targeted site selectors and the end users who represent these projects. So that is a quick overview of what we've been doing. I have here QR code. We have a preview of the ranking. So what I showed you is kind of quadrant by quadrant, but we have that 1 through however many metros are in the U.S. rankings that are coming out soon. You can get notified of when those come out if you're interested. But that's all. Thank you all. I came right up to time, Matt. So I don't know if we have time for questions or just move on along.